Hello, everyone. Happy Easter. Jose Ricaurte, Jaen, directly from Dubrovnik. And we have our favorite data scientist all the way from India, Mahesh Tank. How are you, Mahesh?
Doing good, Jose, and a happy Easter to you and our viewers.
That's great. The Lord rises, hermano. He
Amen.
does. Amen. Now, you reached out to me early in the morning. I just finished recording trading idea, investing idea. But BUD, that's the ticker symbol. It's a company that they have a wide range portfolio of different beers. It's a great idea. I love it. And then in the middle of it, you reached out to me and said, hey, Jose, I have something. I really have something. I want the audience to hear about it. And I was like, sure, bro, let's do it. Absolutely. And we said this so many times. If you want to get better at this game, the game of trading and investing, you do have to study. You have to prepare yourself. So one thing that set us apart from any other trading service, investing newsletter, or whatever you want to call it, gurus, or those that actually think they know something, is that we focus, we put down the hours that we need to improve our craft. And that's what we do. So this weekend video on Sundays, it's called Research and Development by the War Room. Mahesh, the floor is yours.
Sure, thank you so much. So I want to talk about GBPCAD today, shorting this currency pair, Great British Pound versus the Canadian dollar. So as you see on the chart, we have the pair already loaded. I want to show you a few things here. It's a clearly established downtrend if you just look at the chart. So what happened here is it tried to, the first time, it tried to come back and retest the 38.2 level. And then again, it went up and tried to retest the 50 level. Both times it failed. And this is the second time at the 38.2 level. And this time, the previous month, all these are monthly candles, the previous month was the third failed attempt to break above the 38.2 level. And if you see over here, the volume was pretty good. Just have a look at it, If you consider this all as an average volume, this was a pretty high volume compared to all the, I think, last couple of years. So despite this, it was not able to break through. So this makes me think that once it has failed to break through, is it possible that it can be setting up for a short? So based on that question, we will be narrowing down, go to the shorter time frames and see, are there any indications, are there any signs that give us conviction to take this trade? So let me narrow down to the weekly. On the weekly also, we see a real good rejection. This is a pretty strong rejection. It was trying to go up and was pushed down by the selling pressure. And let me just show you on the fat man here. The fat man, just let me grab my annotation tool. Have a look at the fat man. GBP is heading downwards and the Canadian is actually already in the overbought condition, making it a prime suspect that it is possible that the Canadian dollar can start rounding up and start coming up, whereas the GBP can start going down. That's just a premise, just an idea as of now. But as we narrowed, yeah, you want to say something?
No, I say yes. I absolutely see what you're want to convey, and it looks like the Canadian dollar, if you follow Fatman, which is our favorite leading indicator, seems to be poised for a multi-week reversal.
Yes, so we will check that. So let's now just go to the lower time frame, which would be the daily chart. Let me, okay. So we are at the daily chart now. So now what I want to do is I want to take another trend Fibonacci. So I'm going to take it from over here to here. And I think let me delete the monthly Fibonacci. It might be a little confusing there. Now, on the shorter time frame, if we again take the trend Fibonacci, we see clearly that it is again failed to retest and break above and remain above the 61.8 level right over here. This area, it failed to break over and it just could not do it. It tried it again over here, but it failed again it failed. The volume was pretty okay, but it failed to go past that. And the previous day's candle, the volume is pretty low. The reason being it was an Easter not Easter, it was a Good Friday, and most of the banks were closed and countries had holidays. So we would be discounting this. But just looking at these three candles, again, I'm seeing rejections on the, the daily time frame. Let me just narrow down to the 4 hour now. I'm going to go to the 4 hour. And I will be showing you something very interesting, something will give us a conviction and a bias toward the downside. I'm going to firstly erase this. Okay. So what I want you to see here is just have a look at this volume, this volume, and right corresponding to that, we have this particular candle forming. I think we can call it a kind of a doji, maybe not the exact kind, but kind of a doji. Now I want you to get this idea. This is an uptrend. Okay, in an uptrend, we have a pretty good volume. It's much more than an average volume. You see this line, horizontal line is the average volume. We have a pretty good volume and we see the price is not going up. The previous candle, this blue candle went up, but right over here, something happened. All the volume was absorbed into something and it was not into buying, it was into selling. People were, starting to sell at this point. Again, you have a look over here. This particular candle was a very strong rejection. This candle right over here had the highest volume, one of the highest volume, if you see at this area. So what happened here? Again, we need to question, it's an uptrend. Price is supposed to go up with a strong volume, but the opposite is taking place here. And again, this one, you see two strong rejection of dojis, and the volume, again, it's a pretty good volume. It's not a low volume. So this indicates a clear weakness and the inability to break past a particular level. So this is what is called as, I think it's called a distribution phase, if I'm not wrong, from what I read from Anna Cooling in the BPA, volume price analysis. So she says that this is possibly the area where the big players, the market makers, they're selling into the pressure, selling into the upward move. This is where people get in and get the FOMO. They think it's an uptrend and we have waited enough and we need to get in now. And it is possible that there's a lot of heavy selling going on over here. So what I want to show now is, have a look at it. This is let me change the tool. This candle, this candle, now let me point it from the bottom. This red candle is a strong engulfing candle which breaks all this previous candles zone. And you see that this is a very high volume corresponding to the engulfing candle. What happens after that? Just have a look what happens right after that. Right after that, the zone shifts, a sudden down move and a steady increase in the volume. So this indicates the buying pressure is actually increasing and people are actually starting to sell into the move. And you can actually see it, go down a lower high and a lower low, and a trend may be beginning to, set in motion now. Again, we see pretty strong volumes increasing, prices starting to move down. So this is my primary, my primary reason for believing that GPBCAD may be setting up for a short.
Okay, great. I love it. It's there's a volume in it, a price. We are applying Fatman lead indicator, and you're up to something like whole distribution. And let's face it, there's a little bit of a fundamental shift. Apparently, the OPEC, they come up with 10 million cuts estimated. There's a little bit of the word on the street that Mexico was playing hard to catch. They sort of transferred that to Trump, but there's no legal basis that Trump can actually absorb those 350 or 300,000 barrels, and then Mexico will cut. It seems that it's stable, and we shouldn't be surprised that a move to the upside is available in oil. Everyone is shorting. So when everyone is shorting, the sentiment is extremely bearish. You have all these massive headlines coming from Goldman Sachs saying, oh, it's just coming back to 20, then to 15 probably. We know it, Mahesh. It's time to buy. It's always.
Because volume is the leading indicator. It reveals the inner workings of the market.
That's all it is. We need volume.
Yeah.
That's absolutely
Also,
what it is.
Yeah, let me just show you the analysis from the fat man directly. So what's happening here, yesterday we discussed that the GBP, this orange line is the GBP. It's starting to flatten out if you see over here. But the Canadian dollar is supposed to be coming from the fair value. It has already retested this fair value of 50% level, and it may go up. And as I previously indicated, it is possible that in the near term, in the coming week, this may cross over like this. It is a great possibility. Also, this is the 4 hour on the right hand side. On the right hand side, we see the GBP failing to retest the 50% level, the fair price level, and it may be beginning to head down. And right here, you see the Canadian dollar curving or pausing and starting to curve toward the upside. So even from just directly looking at the fat man, we can see that there is a probable understanding that in this particular pair, GBP and Canadian pair, the pound may weaken and the Canadian dollar may be stronger in the coming week.
Absolutely. I can say that. I'm pretty sure the audience appreciates all this research that you put down and worked for every one of them. Do you want to add anything else before we move to the other exotic that I have for everyone today?
Sure. Just indicates the levels if someone wants to get an understanding of what levels they can be trading.
Yeah.
Let me just have a look at that.
Go ahead.
So, if we can make an entry here, I think our stop loss can be anything about 150 pips, and we can go for this level, the 38 level of the Fibonacci. This is just playing safe in the short term. So we'll have a risk of 150 pips and a shorter take profit of about 250 pips. That's the, the first target. And if you want to really take it, you can actually target up to 500 pips with a risk of about 150 or 200 pips. So if you're going to target the 500 pips, I would say you can place a stop loss over here because it has been previously retested. So with the risk of 200 pips, you can actually target this low because that's a good support area over there. So 500. So in any case, you will be getting a risk to reward of about greater than 1.5.
That sounds doable. That sounds really good.
Yeah.
It's compelling and always comprehensive.
Also, let me just show you from the Hawkeye indicator. On the Hawkeye, the monthly has a bearish sell signal over here. We see a flat zone here. It has already retested and I again tried to go up. And on the weekly, we have a buy signal, but we see that it failed to retest there. And on the fat man, we are seeing it actually going down, the GBP going down below the 50% level, and Canadian dollar coming from the the oversold condition. The daily actually has two sell signals. Previously there was a sell signal, then a buy signal, but the latest signal is a sell signal on the daily. And I think the 4 hour also confirms it, the bias for selling. So pretty good conviction we should be having to short this, Jose.
Absolutely. I totally agree. And this is one of the trades that once the market opens, we're going to prepare our simulation, tracking. The information absolutely goes out to our clients. They're going to trade with live money. And as just to help to track the ideas, we'll place them on different accounts, totally different from what we do in intraday. And then we just come back at the end of the week, see what happened. And as usual, reflect, study our successes and as well failures. Thank you, Mahesh. Now, let me take the floor for closing. I'm going to take a look at the exotic US dollar, Turkish Lira. Now, I've said this chart with Mahesh this multiple times. There's not really anything scientific about what I'm about to share. This is very simple. Can you see my screen, Mahesh? Let me know if you can see my screen. Okay, I think probably he just had to do something.
Yes, I see the chart now.
Okay, perfect. Now, guys, let's take a look at this. This is the US dollar versus Turkish Lira platform, one of the best charting platforms, trading view. The data is coming from Moanda, being reliable source of data. I like it. It works very well. It seems that I get true volume from them. Pretty simple. Not that I need it. Not a surprise. Look at what we have. You don't need to be a genius. Simple. You draw the line, you have a bullish trend. Now, look at this big bullish Japanese candle. This is 33.14% higher. Now, at some point, it was all the way up to 45.75%. Devaluated the Turkish Lira against the US dollar. It's not sustainable. It's simply not sustainable. So what the price does eventually, it's not good for the US dollar and it's not good for the Turkish Lira. Price retraces and it goes all the way back almost 29%, give and take 30. Now, 1, 2, 3. It takes 3 months of full reverting to the average price that it needs. Remember, Forex currencies, they are alive. They are real prices that companies, tourists, they use on day-to-day transactions. So it cannot be too high or too low. Just right there in the middle. Now, where are we so far? So after this happens, prices get appreciated for the Turkish Lira about 29%. And then in the next couple months, we have this. It goes back 35.25%. Now, it's quite simple. The market has memory. Look at it. It's right there. And as I say all the time, in your face. In your face, guys. If it just did that, went back to the higher band, and we know it's not sustainable, it's simple for me to take, based on fundamentals and statistic, a short position, which I already did on client's account, and I'm sharing this information so you still are on time, and you can do the same. Basically, what we're looking is coming all the way back at least to this first level. What is that opportunity? How much money can we make? Think about it. Look at it. 10% appreciation for the Turkish Lira. That means, in other words, the Turkish Lira is devaluated by, take my pencil, at least 10% against the US dollar. It's simple analysis. So if that's my opportunity, I'm looking into the next 2 weeks in April and at least 4 weeks in May for a trend reversal back to fair price, a fair value for the Turkish Lira. Where is that fair value? Well, it's simple. You have $6 and all the way to $5.50. Among this price is the fair value. Let me remove a little bit of all drawings. First the pencil, and I'll remove all drawings. Fair value then, somewhere around 6 and 550. That is the fair value. So if this is the fair value, there's a perfect opportunity, trading and investing opportunity. It's a low maintenance transaction. You can short with a small trade. All depends, remember, your risk profile. I will say 2.5 mini lots. I wouldn't dare to go with more than one standard lot, and you will require a $10,000 to $20,000 account. But if you have a $5,000 account, it will be worth for you to go with 2 mini lots. Why not maybe half a lot if you're looking to add into this trade idea? The opportunity is right now emerging market currencies. Pretty simple. They have been overstretched, overbought, favoring the US dollar. The US dollar cannot suffocate, asphyxiate these economies. It has to let go. And based on patterns, sharp patterns, appreciation, look at this level. See this. It's already at the offer, previous offer back in October, this is between, I think, October 2018. At the offer, we have to expect, there's statistical evidence that there's a 90% chance of reversal. And that's what we're looking. I'm already in the trade. I suggest you go and also review all the evidence and may want to take a short disposition, US dollar, Turkish Lira. Okay, Mahesh, I think that's it for today.
Yes, that's it, Jose.
Okay, perfect. Well, as usual, guys, go to the description of this video. There is a link for you to join our Telegram group, The War Room. Mahesh, myself, we're feeding our clients, members with different views, ideas that you can execute. We measure risk. As we measure risk, profits, they come walk into your pockets. That's all it is. Now, again, join, click on the link. There's a free tool that we also have in the description of the video. If you need to reach out, you have my email there. Also, if you like the video, you can reward us with thumbs up. You don't have to. And hey, you're free to join, subscribe. Market Traders Daily. Every day, nonstop. We don't quit. No mercy with the markets. This is the time, guys. The world has changed. We have been challenged, and we need to step up the plate and accept the challenge. You have to grow. Time for you to develop the skills into this new decade. There's a better world, a better and brighter future waiting for you. It's you. You have to commit and command change. Thank you, everyone. On behalf of Mahesh Tang, data scientist, and myself, Jose Ricaurte Jaen, multi-asset analyst at Market Traders Daily, we thank you. Happy Easter, and see you guys tomorrow. Ciao.